chief economist at America First Policy Institute, joining us in Fort Worth, Texas. We'll probably have Linda McMahon, chair of AFBI, joining us shortly. Faulkender, welcome down there in Texas. Let's see. We have some sound from Fed Chair Jay Powell. Take a listen to what he said.
The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence. That said, we think policy is well positioned to handle the risks that we face. If higher inflation does persist, we can maintain the current level of restriction for as long as needed.
All right. They've thrown in the towel, no rate cuts. That's my reading. Shouldn't have talked about it in the first place. What do you think, Mike Faulkender?
Well, Larry, it seems like yet again Jay Powell is late to the party. You know, he was very late in recognizing that inflation was coming in 2021 with all of the Biden spending that was going on. It took him forever to recognize that that inflation was not transitory. He eventually had to retire that word. And now he's finally recognizing that maybe interest rates alone are not going to calm markets and calm consumers when it comes to all of these price increases. Look, Larry, you and I have been talking for a long time that you cannot simultaneously have regulatory policy and fiscal policy throwing gasoline on a fire and then think that Jerome Powell's fire hose can dampen all of the inflation that those things are causing. You know, unless and until the Biden administration is going to switch gears, cut back on all the spending, including the student loan forgiveness that we've talked about, deregulate, particularly in the energy sector, and as you said, drill, baby, drill, there's every reason to believe that inflationary pressures are going to continue, which is why the market thinking 6 rate cuts earlier this year never made any sense. The market thinking we were going to get rate cuts in the first or second quarter of this year, and Powell talking about 3 rate cuts this year. It's about time the Fed see that there's nothing changing to cut back on the inflationary pressures.
Well, basically, the CPI in the first quarter up 4.6% at an annual rate, 4.6. The Fed's target is 2. By the way, Jay Powell's so-called favorite core measure, this is all gobbledygook, but I'm going to read it anyway. Core services CPI ex rents. What I don't even know what that means. I've been doing this stuff 50 years. But my point is that's up 8.2 at an annual rate. So whatever it is, it's almost 4 times the Fed's target. So he's finally throwing in the towel. I would also say the Hotlanta Fed GDP trackers said 2.9 in the first quarter. So the economy is very resilient. So there is no reason in this planet Earth for the Fed to ease interest rates. Otherwise, they would be accused of juicing the economy to reelect Joe Biden. They wouldn't want that accusation hurled at them, would they, Mike Faulkender?
Well, let me add on another number, which is that the jobs reports recently have not demonstrated the need for the Fed to try to curtail the rate levels that they're at right now. But no, I mean, why was Jerome Powell ultimately late to raising interest rates in the first place? You know, my view is that he was more concerned about getting reappointed than he was in actually being the Fed chairman. And so the idea that they're going to sell the American people that politics has played no role in Powell's management of the Federal Reserve, I think, is mistaken. Look at the extent to which Powell continued to monetize all of the excessive spending. The idea that back in the end of 2021 that they needed to still be buying mortgage-backed securities or engaged in quantitative easing when we had already largely recovered from the pandemic, inflation was surging, and yet Powell was more concerned about making sure that his nomination and confirmation went through. So I'm not at all surprised if he were to engage in some kind of, I hope that he won't engage in a political act, but given Powell's tenure, it would not surprise me if I saw politics playing a role in his interest rate management.
Oh, you're so mean. You know that. I thought you were a nice guy, Faulkender. You're so mean to Jay Powell. He's doing
well,
the
Larry,
best he
more
can.
than anything, I try to be honest with you.
Oh, heck. There's a rumor that we have the great Linda McMahon here from Fort Worth, Texas. There she is, the chairperson of America First Policy, former cabinet members, Small Business Administration. Hi, Linda. Welcome back. Linda, you're just in time. I'm going to play a nasty Joe Biden quote about the Trump tax cuts, the ones that completely failed across the board and only helped rich people. Here's Joe Biden talking about your tax cuts, Linda McMahon. Take a listen, please.
Donald Trump embodies that failure. He wants to double down on trickle down. His failure starts with his $2 trillion tax cut that overwhelmingly benefited the wealthiest and biggest corporations and exploded the federal debt.
There you go. That's a little Bidenomics for you to make your day. You know, I would have thought, Linda, looking at the actual evidence, that virtually every person and every sector of the U.S. economy benefited from the Trump tax cuts, including middle-income people, low-income people, including a record-low poverty rate, including record-low unemployment rates for blacks, whites, Hispanics, women, young people. You know, that's the numbers I read. National Bureau of Economic Research, all confirming this kind of thing. But Joe Biden doesn't agree, Linda McMahon. You have a response?
Well, I do, because the facts are clear. Just compare the Trump economy to his. We don't have to guess. It's not what Trump promises he'll do. It's what he already did. The Tax Cuts and Jobs Act went into effect. And what happened? We know our economy grew. More small businesses started. There was great access to capital. Entrepreneurs were able to utilize parts of the tax cuts, like, writing off their capital investment in the year that it was made. More businesses started. Take a look at the economy. It was flourishing. Until COVID hit, we were just flourishing. And then coming out of COVID, because those policies were still in place, the economy started, as you quite, accurately called it all the time, the V-shaped economy. It was on the way back. And that's what Biden came into, was that V-shaped economy. So the growth that we're seeing, the jobs that he is claiming to have created, really are a lot of those jobs coming back on the economy after COVID. So tax cuts do work. We had greater revenues, Larry. How many times have you told me that? Revenues went up under the tax cuts.
I didn't make it up. I'm just looking at the actual statistics of income from the IRS. Mike Faulkender, distinguished economist at Maryland University. I mean, here's the last one, Linda McMahon. Joe Biden wants to raise taxes by somewhere between $4 and $5 trillion. Donald Trump wants to extend the Trump tax cuts, probably be worth a couple of $1 trillion, although it's going to pay for itself like it did. Which one's going to help the economy more, a $5 trillion tax hike or a tax cut? I ask you, Linda McMahon.
Well, Larry, that's a layup question. The tax cuts are going to help the economy because we've shown it. We've shown it with Reagan. Hey, we showed it with Clinton even. And then when Trump came in, clearly, tax cuts do increase revenues and the economy flourishes.
You would think, but then again, Mr. Biden doesn't think. Linda McMahon, thank you. Michael Faulkender, thank you.
Thank you, Larry.
All right, folks, coming right